Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. I am in a chipper mood here. I'm feeling the December effect coming up on Christmas and New Year's, and I love the holiday season. And this year, one thing that I'm excited about is that my family seems to be on the same page or in agreement with the idea of doing a white elephant and Secret Santa rather than everybody buying gifts for everybody else. And look, I've been pushing for this for years, but I'm the oldest of four. So, you know, the younger ones were like, "No, we want gifts, from the parents." But I'm excited about doing that. I think it's going to happen this year. It's been in the works for a long time in my household. Um, so, anyways, I like that because the gift like obsession of Christmas to me is not the fun part at all. Like, in fact, I actually dread like buying gifts for everyone um and not that I don't like buying gifts for people, but I'd rather like make a gift or write something to you or receive that gift myself, to be honest. Like, I'd much rather somebody write me something than buy me something because you know, I guess I'm in a good circumstance to not need anybody to buy me anything. I understand that, but I also recognize that it just feels like a shopping spree, and I'm just not a shopper. Like, I'm truthfully not a very materialistic person, and I just don't have a lot of wants that I want people to buy for me. Anyways, what do you guys think? Does anybody else, like, if there's one thing that could make me a Grinch during Christmas, it is the gift, obsession culture, at least in America. Here's another hot take. I don't like wish lists. I don't like, again, personal take, hot take, I get it. Unless you're a kid, I think wish lists need to be banned. This is my thought, okay? Hear me out. Writing down a wish list for Christmas to give to other than your spouse, not even a wish list, like maybe one item, okay? Look, this is trading content, I promise. A wish list, right? A wish list should be banned unless you are 18 years or under and you live in your parents' house and you're asking your parents for a gift. Totally cool. But wish lists to just give out to everyone is weird, bro. That's weird. I'd love a Lambo for Christmas. All right, let's all pitch in. Let's get what's his name? Venom, a Lambo for Christmas so he can look like an absolute menace driving down the highway with that screaming tooth-faced icon. You can see his profile picture there in the bottom left. Unless it's Edge Finder. Edge Finder should be on every single person's watch list or wish list, and you should buy it for yourself because it's a great product. So weird, man. Okay, thank gosh I'm not the only one. Like, it's so weird to me. Gift giving shouldn't be gift expecting. It's so strange. Anyways, that's my hot take. That is something I will die on. I think it's weird to ask people your age or people in your family for gifts as opposed to just, hey, write me a letter or, take me to a show or like, let's do something fun together. Like, that's a better gift because that's, as opposed to just a money grab. That's the weird thing, man. It's just weird. Sheldon Cooper's take. I don't even know who that is, but I'm curious. Edge Finder for Christmas. I got myself Edge Finder for Christmas this year and last year and the year before that and the year before that. Best gift you could possibly give yourself. So check this out. Let's get into some markets. I was looking at the put call ratio here for Bitcoin. I just wanted to follow up for my regular viewers yesterday. If you were on the stream, I talked about this, how I didn't like scoring was improperly being done with Bitcoin. I think we fixed it. Yes, we did. So yesterday, if you have been really paying attention, no shade if you haven't, but we talked about sentiment on Bitcoin was bugged. We fixed it. So sentiment tracking, crowd sentiment is neutral. We can take a look at that. What we're using for sentiment specifically is IBIT options. Okay, so Bitcoin, one of the most liquid traded Bitcoin ETFs. We are tracking the options flow on that in the put to call ratio selecting for Bitcoin. Now, the reason that matters is because we want within Edgefinder scoring to generate a bullish report when everybody's getting too scared and buying puts. And we want the Edgefinder to generate more of a bearish outlook when everybody's getting bullish on it. Okay. So basically, when everybody gets one side of the boat, Edgefinder should signal, hey, some caution on that, maybe go the other direction, or at least, you know, be cautious about going with the crowd. So right now, what you can see is Bitcoin options flow through IBIT is trading in between our extreme thresholds, our high put and high call volume. Also, for put call ratio lovers, I got a cool feature coming to you guys. I'm going to make a heat map of this. So instead of having to look at every single one of these, right? So if you want to look at SPX, gold, if you want to look at all the put call ratios, we're going to build a put call ratio heat map. And boy, am I excited for that. I think it's going to be really cool. So if we look at gold, for example, gold sentiment is very neutral right now, not too extreme in either direction, although gold continues to melt up here in recent weeks. Let's take a look at gold just from a price action perspective. By the way, NASDAQ looks healthy. Nice little intraday reversal yesterday. We shot lower and then price came right back up. Nice little rebound from the bulls. My fiance is loving this hot take. That's awesome, Alan. I'll expect a gift from you too. And I want to make sure that you guys spend a pretty penny on the gift that you send me. And my wish list this year is a modest second home. I'd like you guys to all pitch in and please purchase me a second home. And if you don't administer to my Christmas wish list, then you don't love me and you're terrible people. That is gift giving culture in a nutshell. Can you tell I'm a little bit, there's some personal pain here? No, there's not. I just think like it's weird to me to go out, everybody go spend $2,000 on gifts this year, as opposed to, hey, just like, let's write each other letters. I don't know. Or like, let's get together and have a coffee date, or like, let's everybody come over and sit on the porch together or something. Like, to me, that's a better gift. Doesn't cost everybody an arm and a leg and everybody enjoys it more and it's less, you know, selfish. Anyways, where was I? I was looking at gold. Let's take a look at precious metals. So gold is pulling back here a little bit. So we have got this 4,200 level here, still kind of the line in the sand for bulls. Let me zoom in a little bit more on this. I agree, man. No feelings involved in buying stuff at all. I agree. Like, now there are times where I want to buy certain things. Like here, don't tell anybody. I'm thinking about like a small gift just to give to everyone. This is not like an actual gift, but I was thinking about it for myself. I was like, you know, I need to put some like everyday suntan lotion in my car because, you know, it's good for your skin and helps you to, you know, protect your skin from the sun. And I was like, you know what? Why don't I just give that to everybody? I give everybody a car, you know, suntan lotion. There's like little things like, to me, that's more like thoughtful. I'm like, well, I'm taking care of myself. You know, let me take care of everyone else. Like and that doesn't cost me $2,000, but it honestly is more personalized in my opinion. Hey, I thought of you when I was doing this. Anyways, I'm going too far off the rails today. We can start a whole nother channel, for Nick, the Christmas Grinch. But today we gotta stay focused on markets. So gold here, I'm still long gold. I've got a stop loss below. If we can't hold this area, and then I'm going to go ahead and stop out, move on to my next trade on this. I do still like gold. I actually like Bitcoin quite a bit, but I need it to, like Bitcoin I mentioned, sentiment here back in kind of the neutral territory. But if I go back to my market screener and look at Bitcoin, you can see Bitcoin's getting a nice bullish rating here overall on Edgefinder. The trend here on the 4-hour chart starting to look a little strong, but we've got that major level of resistance that we're going to look at. Seasonality, we know, is historically pretty bullish. It has not held up to standards this year, but overall, I still think it has good potential. COT data, bid neutral, but then recently there was some buying that took place on the institutional side of things. Crowd sentiment for Bitcoin is pretty neutral. If we take a look at inflation, inflation looks okay because you had CPI come in softer than expected. Interest rates look like they're coming down overall. That is a tailwind for Bitcoin. Employment is a little bit mixed. We know that's kind of a, ADP numbers were not so good. Employment change from the NFP report was good, but unemployment rate went up. So mixed bag on the jobs report. It looks a little soft overall. Economic data, we have GDP that came in stronger than expected. Yesterday's services PMIs, I didn't even look at that. How did I just miss that completely? Let me just go look at what that was. I'm assuming it was better than expected. Services PMIs, yes. Services PMI beat expectation. Manufacturing PMIs missed expectations, although services is the more important of the two, as it is the much bigger component of the US economy. We're a service-based economy. Okay, so some strength there. That's good. Go back to our Bitcoin analysis. Yeah, I mean, I like the setup. I like the upside potential for Bitcoin. You've had a really sharp dip. Sentiment has been pretty pessimistic over the recent weeks, at least just anecdotally from looking at Twitter, crypto Twitter, etc. It's been in the gutter. People are really pessimistic on the crypto world. If we look at this from a technical perspective, we have clear lower highs and lower lows in this market. On a technical basis, for me to potentially get long, essentially to take a long position, I would like to see us clear this current area to the upside. So specifically, let's call it 93,000. If we can get up above like 95,000, right? If we can get up above 95,000, 96,000, somewhere in there, to me, that would be potentially worth a stab on the long side. And I'd be looking for higher lows, higher highs in order to trail a stop loss. So just to map out a trade example, let's just say we get a nice push through the highs here in the next day or two. I would be looking for this current area to hold as support. Let me just narrow this. I'd be looking for this area to hold as support pretty clearly and pretty quickly, because this is sort of still, I wouldn't say it completely counter trend, but you're still talking about a market that's still in the early phase of trying to prove itself. We've had periods like this before that have resolved to the downside. So you have to look at this with a very honest take. If this thing breaks through the lows, then I want to get out of it, right? So if this thing were to break through the lows, that would be another sell side move, most likely in my view. But when we look at Bitcoin here, you could also say the same if you were to get a bullish breakout here. This would change the nature of this chart. If you were to get this kind of move, I really like that to the upside. So Bitcoin is a setup for me. I'm not going to go long at this level of resistance at this current level, but I do like edge finder confirmation being on our side, right? And we also have unemployment claims here coming out in just 10 seconds. We'll see if it does anything. It has recently not been moving markets much, but you can always get a surprise. So let's see if we get any surprises. Unemployment claims coming out. See what this brings us, if anything. Forecast is for 219,000 jobs added. I'm sorry, 219,000 unemployment claims. And look at this, guys. 191,000? That is strong. 191. Wow. That's a really upbeat jobs number. Actually, that kind of throws something into, look at that, dollar reacting immediately. Are yields doing anything? Yeah, look at yields. Yields jumping higher on that. Bonds trading lower. Euro dollar trading lower, pound dollar trading slightly lower. Gold, silver continuing to move lower. Wow, that was interesting. That actually was a pretty good little surprise there. Unemployment claims came in much better than expected. I love how he deleted the trade from Bitcoin. No, I still like the trade. That wouldn't change my bias. I was just trying to clean up my chart view again. Wow, that's interesting. Also, unemployment claims being good. While that challenges a bit on the how many rate cuts we're going to get side of things, I take it still as a very positive thing for Bitcoin. I like an environment where employment is healthy. I know that the market loves the idea of like, give me rate cuts, give me them now, but I'm more in the camp of I'd take less rate cuts and a healthy jobs market and GDP growth over the opposite. So we'll see. Can you add South African stock market? We probably will eventually. It takes us time. If we see the same request come enough, we'll eventually add stuff. But we have a lot of tools and features that we're building, and I can't promise that anything will come out immediately, but eventually, yeah. Japanese stock market really jolted here higher. Gold holding steady at support. Again, I'm out of the trade if we break through this. Just take profits on that if that happens. Yeah, that is unemployment claims, man. That was a solid jobs number. Usually these things are like really minimal changes week to week, so that was actually pretty big. What's your lot size? Any recommendation with $500 capital? So I don't use primarily. I don't trade Forex. I do trade Forex, but the majority of what I do is not on an FX brokerage. In the U.S., we have limited. Like I can't trade CFD. So if you trade XAU USD, if you trade NAS 100, I can't trade those things on a US regulated brokerage. So I trade ETFs personally. You can also trade futures. I do trade Forex, but it is a smaller component of what I do than what I trade primarily, which is precious metals, indices, crypto, etc. Nick, Japan is rising interest rates and no growth should be bad for the Nikkei. Something must have been said this morning. Does anybody have that information on me? For me? We had something. I was not sure about this. I saw this morning when I woke up. The Japanese 10-year yield is jolting higher, but at the same time, the Nikkei is also higher today. I thought that was kind of curious. Was there some sort of spending announced from Bank of Japan or Japanese government? That was my expectation, is like stimulus. I don't know. Anyways, yeah, we'll see what happens with the dollar. Dollar did have a really bearish day yesterday, like a really solid close below this level of support. But you do want to see some follow through here. If you get this pullback, the question would be, are sellers going to come in and take it from there, or are they going to push it back lower? We'll see. Take a look at NQ, of course. I like to do the NAS 100 just because it has a lot less gaps in it for basic analysis. I also do analysis on QQQ, which is what I'm currently long myself. But it's all the same thing. It's all NASDAQ. So NASDAQ, I still have a long position on. It's been a quiet few days. We've been grinding higher. So still, the trade is still very much valid, very much alive. We caught that dip back down here towards the October 10th lows. This has been a really solid trade for me. I wouldn't say it's trade of the year, but if it does head back through the all-time highs, it has the potential to become trade of the year for me. In terms of a timing, I barely stayed in this trade. We almost stopped out of it, but we reversed course, held support, and so far we still look constructively bullish. From a higher time frame perspective, the moving averages, 100-day moving average, still very much intact. If you take a look at the weekly time frame, NASDAQ looks excellent. Beautiful how we found support. I mean, this is just the perfect symmetry that took place on the NASDAQ. What was a level of resistance, we broke through that level, retested that level, shot higher, came all the way back, held it. And now to me, it seems like we are likely headed to new highs. That's my educated guess of where I think we're going with NASDAQ. But we'll see. Very, very interesting. Hey, Nick, how long does it take to update new data in Edgefinder? So usually within an hour. We have a lot of different automations and scripts that are pulling data and updating it and showcasing in the UI. But yes, it is a constant battle. There's so much data that we're importing and updating and stuff. So usually within an hour. So we will see. Anyways, also, I'm just curious if you guys could throw out, what would you like me to look at next? I've got NASDAQ on deck. I'll take a look at gold again. Any other, should we do more currency pairs today? Give me 1 second. I just got to respond to this text. Been waiting for this text this morning. So, okay. Sorry about that. Nick, can you talk about bonds? Yeah. Yields are where you want to, if you want to keep an eye on bonds, you keep an eye on yields. And the 10-year yield has been sort of oscillating back and forth, but big picture has been trending lower with expectations essentially coming in that, the Fed is going to cut rates. And with the new Fed chair coming in, Kevin Hassett, the expectation is we're going to cut rates a lot. So we'll see. But in terms of where we're going next with yields, it's tricky because it's kind of the same question with the dollar, right? If you're talking about dollar weakness, dollar strength, I've been very neutral on this for the simple reason that if the Fed cuts rates, it's not necessarily up to the Fed how the long end of the curve, mortgage rates, long-term borrowing rates are priced. That's priced by the market, not by the Fed. Short end, like the overnight rate that they set, that's set by them. But long-term, like mortgage rates, the stuff that people actually care about, is set by the market. And so if the Fed cuts rates a bunch of times and the bond market disagrees with that decision, rates can remain elevated. So it's a tricky dynamic. Sorry, still responding to this. Okay. But anyways, yes. So the idea is this: if the Fed cuts interest rates on the short end of the curve, that will impact the short end borrowing rate, which is what banks use to like borrow money, et cetera. But banks tend to lend on the short end and borrow on the long end. I'm sorry, the opposite. They borrow on the short end and lend in the long end. So people, when you go get a mortgage, it's with a bank usually, right? And so of course the long end is what matters to people. Like if you're going to go buy a house, you don't care what the overnight rate is. You care about what the mortgage rate that you're getting is. My wife said, my wife is telling Nick, you better not be getting me lotion for Christmas. Hey man, lotion is amazing. I don't know. I've been it's been cold where I'm at, and lotion is saving me right now because it's like my face just feels dry, you know. But then I just put it on every day; it feels much better. Anybody else dry as anything recently? What I do is I fill up a bathtub of lotion and I just lay in it, and that's how I avoid being all dried out. Actually, I just sleep in it. Euro dollar making a little bit of a push higher here. I'm curious to see if we hold this area or if we actually get a breakout to the upside on euro dollar. Euro dollar's been testing this level a couple different times. Sellers coming in. We'll see. You have to say no, Diddy. No, Diddy. Kiwi dollar. Kiwi dollar looks really strong. Actually, I saw I think it was Marco in the group. He was looking at a long setup on Kiwi dollar. I'm not sure if he took that or not. But Kiwi dollar looks pretty interesting. NZD USD getting a really strong reading on Edge Finder. Very interesting. Kind of breaking downward structure here. Looks like it has, at least for now, maybe headed up to test this area. Let's see what else we have. Euro dollar also getting a really strong reading. Very interesting. Yeah, I think like short run, if you get a break above this area, we'll see what happens. Euro dollar could have a little bit more upside. Pound dollar. Pound dollar, I am super neutral in. I have a small short position sitting on it. But pound dollar, nice little candle here to the upside. So I am short on pound dollars moved against me. I have a really tiny position with willingness to add to that short position. Longer run, I'll show you guys. I've been talking about this from a currency trader trading perspective. In the short run, there's some stronger currencies out there, like the AUD, the Kiwi, Swiss franc is even getting some stronger readings. What this is showing you, by the way, this tool is the economic surprise meter. It shows you currencies that have been recently seeing outperformance in their economic data compared to forecasts versus underperformance if they're lower. So feel free to read along with me here really quick. What this chart is showing you is that a higher score indicates that the majority of key economic metrics, think GDP, PMIs, CPI, have recently been strong relative to economic forecasts. A lower score indicates that the majority of key economic metrics have recently missed their expectations. So this is pretty good for active traders, in my personal view. If you are going to be trading currencies on a, 1 hour chart, 4 hour chart, daily chart kind of thing, I think this is great. If you are more of a longer term thinker with your currency trading, I like this new thing that we've just recently added, this macro matrix. Currencies over the longer stretch tend to drift in the direction of real yield. Okay, so what that means is that currencies, most of the volume going through currencies is not traders. Most of it is just business activity, right? Tons of currency moving around and investors, moving money to go buy stocks or go buy bonds or go buy real estate in a particular country or currency, right? Or businesses who are moving money from Europe to the US or US to, Asia or whatever, right? A lot of it is just transactional volume that's going through the currency market. Well, a lot of times, let's say that you're an investor in, I don't know, let's say you're an investor in Singapore and you are looking to get some sort of yield for your clients, like you're a manager. If that happens, if you decide you want to get yield for your investors, where are you going to potentially go? You might choose to go to the US where you can get some good return on bonds, right? with relative stability. I mean, it's the global reserve currency. There is a real yield in the US of about 1%. What is real yield? It is simply defined as, or oversimply defined as, interest rate minus inflation. Okay. So if I park money in US bonds, and let's say I just get roughly 4%, and inflation is likely to erode around 3% of the value of in the currency that I've moved over, right? I've got to sell Singapore dollars to buy US dollars. There is a real yield of around 1%. I know it's not a lot, but the point is, if you have a bunch of money that you're just parking to protect for a client, etc., you may choose to go where there is the highest real yield, which real yield, again, interest rate minus, hold on, I'm going to sneeze. 1 second. Okay. Yeah. So anyways, Singapore mentioned, yes. So anyways, real yield is important because what you can see here is that, like, for example, if we're looking at the UK is getting a neutral bias overall here. This is more of a long-term outlook. This is not a short-term indicator by any means. Total score is getting a 43. You can actually see how we've scored this matrix. I think I'm going to rename this thing to something more like longer term. I don't know what I'm going to name it yet, but if you have any ideas, the idea is basically big picture macro scored for a longer term projection of where a currency is likely to go based on real yield. Now, of course, other factors can change trajectory. This is never a guarantee that the price of something is going to move somewhere because things can change. But this tool is quite simple and quite cool because what you can do is you can see it's looking at the big stuff: GDP, unemployment rate, interest rates, and CPI. Now, if you're familiar with Edgefinder, then you know this already, but Edgefinder scores stuff based on expectations and actual. The reason this is unique is because it does not take into consideration expectations. It only focuses on the absolute or actual values of these economies. Now, when you analyze actual versus forecast, there's a trade there, right? There's a lot of times there's like, oh, we beat expectations, the thing should rally for the next week or two, or that's the idea, right? This is looking at it more of like absolute basis, GDP growth in the US, everywhere else does not have growth. US has growth. Unemployment rate is relatively stable. Interest rates are high and offering yield that surpasses the inflation of that currency. Hence, over a larger stretch of time, just based on these metrics, there are other things that could change this, but just on these metrics, the US looks relatively strong compared to peers, right? So in the short run, I'm not necessarily bullish on the dollar, but over a larger stretch of time, something like Kiwi dollar looks like a pretty interesting longer term short based on these metrics. The real yield, if you might say, hey, New Zealand is offering a 2.25%. Actually, I've got a better example. Let's look at the pound. The pound is really interesting. Real yield for the British pound. You say, oh, they're offering 4% just like the US. I could get some good yield out of buying British or UK bonds, right? Gilts is what they call them. I could buy some gilts, gilt plural. I don't know. I could get some yield, but the problem is they're sitting at higher inflation. So that higher inflation is eroding into the gains that you make. If you make in a year $10,000, but then inflation erodes away a lot of those gains and your 10,000 really acts like 6,000 or, I don't know, like 8,000, that's real yield, right? That's a real thing to people who are managing millions and billions of dollars. This stuff matters a lot. So the real yield on the UK or the British pound is less right now than it is on the US. This stuff is really important. It's high level. I mean, it doesn't even have to be. It can be kept really simple. The US dollar still offers an attractive yield relative to other currencies. And it is also supported by stronger growth. That doesn't mean the dollar is going to go up every day. In fact, short term, I think the dollar has more downside. But longer term, it's a game of comparison. And the US dollar I don't think looks astronomically worse than the rest. In fact, the others, you're looking at the data, they have much worse growth. Unemployment rate is higher in most of these other places. Interest rates are offering less. Inflation is on par or higher in some of these places than the US. Actually, no, on par. Yeah, I mean, inflation is sort of similar across all these places. So it's a really interesting, it's a longer term. I don't know what to call it yet. I need to change the name. I want to call it something that is more long term, like indicative that this is a longer term economic comparison matrix thing. So for my currency traders, that is why longer term, I think the dollar has upside. Short term right now, dollar looks weak. You've got a Fed chair that's probably going to come in and cut rates. You have, you have recently jobs data coming in soft, weaker than expectations in some ways. So, Nick, I don't understand why inflation is relevant in the real yield. If I invest in US, but I don't live in the US, the inflation in the US is irrelevant to me. Good point. Kind of true. Kind of true. Inflation does matter because if I pay you, if you're buying US bonds, right? Let's say you live in Europe and you're buying US bonds. Okay. Let me try and map this out. It is hard. It's actually kind of a convoluted thing. So you're in Europe, and you are interested in US bonds, right? That's what people might exchange currency for. They say, okay, I'm going to sell euros to buy dollars so that I can then, well, let's say we have USD, and then you take that and you buy US bonds, okay? And let's say that this bond is going to give you 4%, okay? This is all just hypothetical and oversimplified. You get 4% gains on this. But if during that time you experience 3% inflation, remember, when you buy US bonds, they don't pay you out in euros. They pay you out in dollars. So you're going to get your dollars back, your 4% dollars back. If 3% of it is eroded, your real return is 1%. Then that gets carried back over to use. Now, the currency exchange does matter a lot because if the euro during that same time weakens tremendously against the dollar, guess what? That 1% return in dollar gets actually improved by the weaker euro scenario. However, if the euro strengthens, the opposite is true. This is the stuff that big portfolio managers, international, they have to think about this stuff. Currency exchange matters because if you're going to go buy bonds and that currency gets devalued a ton due to inflation being high, right? Or, you see what I mean? Like that's where if this number is just 2%, then you're working with a higher return. So the inflation, again, the inflation, you say the US inflation doesn't matter to you. Well, it does because you're going to get paid back in dollars. So if the dollars that you get paid back have eroded, you see what I mean? It does matter to you, even if you're not a US citizen. What also matters if you're not a US citizen is the exchange rate back to your local currency. So it matters quite a bit what the inflation is, because again, it erodes your return faster or slower. So inflation is pretty significant. Dollar depreciation, it's another way of thinking of it. Yep. Nick, you're confusing the audience. We're a little deeper under the surface today, but I think it's good. I think we're pushing our boundaries today. We're learning new things. And who knows, maybe I'm just making them up as I go. But no, we're here to learn. We're here to discuss. We're here to improve. If you're a currency trader, especially, listen, if you're a currency macro trader, that's stuff that you got to have it like this, like easy, right? You can't ignore that stuff because it's real. It's really important to the flow of currency. If you understand how that works, then you understand big players of the table are going to pile money into a certain direction or pull it out of a certain direction based on what real yields are looking like. Nick, do you use the stock box when trading options? I do. I use the stock box all the time, not even just for trading stocks and options. I use it for analyzing indices, for example. I use it quite a bit. Like, for example, I like to look at, let me go like financial scanner. I think this is probably my favorite page because what I can do is I can select for companies that really matter to the index, like Microsoft, for example, and I can see how expensive are they right now relative to history. I can look at relative recent earnings. I can also look at like how consistently are they beating expectations. So here's Apple. Apple has actually pretty consistently beaten its expectations for earnings, right? The EPS, earnings per share estimate versus earnings per share actual. And then I built this chart down below, the earnings surprise, to show us just how significant Apple in this case is beating their expectations. I've ranted here for a while. The tools that we build help people to understand the stuff that I've been discussing. If you want to track things like real yield and have this all automated for you, we are on a roll with new tools that we've been releasing this year, and we have so many more coming in 2026. This year, our biggest discount is coming to a close. We did our Black Friday sale and our Cyber Monday sale, and we decided to extend the Cyber Monday sale just through the end of this week. So here's the thing for you. If you're interested in getting the Stock Box or the Edge Finder, either of those or our VIP group, everything currently is on super sale. If what I've been discussing here today is something that you see value in, if you're like, okay, macro is what moves the markets, I'm waking up to the reality of the real world does impact the markets, and studying the relationship between the two is critical to spotting directional, strong trends in markets. If these tools would be useful to you, I think they will be as well, then you should consider, before our Cyber Monday discount ends, getting access, because we are currently coming to the close of our biggest discount that we do all year long. This is closing up for the year. It's the last chance to pick it up. 2025, 45% off. All of our tools, we're doing store-wide. If you need a discount on anything, do not hesitate. Scan the QR code right below my camera, or click the link that's just been dropped in the chat. You might be saying, Nick, this is just one big sales pitch. You're right. Buy the tools. They're worth every penny. If you want to be a macro trader, if you want to scan financial data to help better improve your analysis, we're here doing something that I think is really important. We're building tools that are accessible to everyday traders. Do you know what Bloomberg Terminal costs? Here's my next sales pitch compared to the competitor. Bloomberg Terminal, they build some pretty incredible tools too. You know what they cost people? $2,200 a month. You know what our product costs? Ready? If you do it today, it's only $770. Now, I know that's not a low price, but it's $770 one time total. Now, if you need to split that up into a couple months payment, we can also do that. But the point is, you pay us once, you finish paying off the tool, and then it's yours. You don't have to pay us every month $2,200, and you get really powerful tools that are intentionally kept simple for the average everyday trader who wants to incorporate macro fundamentals. I'm on a mission to build the best tools I can for traders who are interested in this stuff. And if you don't have a copy, pick it up now before it ends. Our 45% off discount is coming to a close. If you don't mind, James, dropping that link one more time for us in the chat. If anybody would like to take advantage of that, send us a direct message. If you need the payment plan information, we can set that up for you. Our staff is standing by. They can help you out with any questions you may have about the plan or the tools that we offer. So don't miss it. There you go. Cyber Monday is ending. Last chance. All right, guys. Up next, we have the one and only Forex James taking over the stream to talk more setups and ideas. Don't go anywhere. He's coming in just after this quick break. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Ladies and gentlemen, how is everyone doing? Hope you're all well. Happy Thursday. Almost at the end of the week. Almost there. Hope everyone's doing well. So, as I've mentioned a few times, there isn't really much going on with my trading. I'm still in the Aussie New Zealand position. I actually scaled into this one. So as it's the only trade I've got active, or at least the only short-term trade I've got active, I thought, why not maximize the move? I'm still very bullish on the Aussie New Zealand. We had relatively positive news come out. I think it was early this morning or late last night. It was 12:30 UK time, so yeah, early this morning. The balance of trade for Australia came out, which was a positive sign for this trade. So all good with that one. Really nice. Prices respected the fib really nicely here. Nice rejection, and it's a break and retest. So overall, the technicals and the fundamentals for Aussie New Zealand are, in my view, all completely aligned. So I'm completely cool to sit in this one, add a little bit more risk over the Christmas period, and just let it go. Sluggy, good to see you, my friend. OT, good to see you as well. Max, how you doing? Hey James, no, don't add to it. I'm adding shorts. Your shorts. Interesting. Okay. Well, in the case of shorts, again, I as I said, I'm not really too involved with the markets at the minute because I'm winding down for Christmas. So I'm going to kind of just recap basically what I've been talking about for the past week or so. But the Aussie New Zealand's market behavior is actually looking quite nice for mean reversion shorts. The reason I'm not doing that is because lower time frames, so H4, are still bullish. The fundamentals are still bullish. I don't see much of a reason to go short. So for example, when I'm going short euro dollar, when I'm doing my DCA sequences that I do from time to time, one of the big factors for that is the swaps. So I can sit short euro dollar and it doesn't matter because the swaps are stacking up. So I could hold it for a week, 2 weeks, a few months if needed. Whereas with Aussie New Zealand, it's not the same case. Actually, let me just double check. I'm fairly sure Aussie New Zealand's in a positive swap market. So short sellers should be paying. Let me just make sure I'm right on that one. Where are we at? Aussie New Zealand, yes, I'm right. So positive swaps for buyers. So in terms of the idea for a mean reversion, I see the point, and I agree to a certain extent, but I just don't have a reason to execute that yet. If we start seeing a change in the data for the Australian dollar, or we see some positive data come up for the New Zealand or New Zealand's economy, then yes, maybe pivoting some or weaving in some shorts might make sense for a long-term reversion trade. Remember when nat gas was below 3 ball out? I do. Yeah, you were right on that one. So congratulations. Hey James, what do you think about Australian dollar, US dollar? Relatively bullish. The problem I've got is I just don't really like to short the dollar. So we've got Australian US dollar, Euro US dollar, and New Zealand US dollar all reading bullish. So already it's a clear trade. There is not really anything else for me to do other than look to buy, which it is on my watch list actually, but whether I'll take it is a different story. So I'm looking to see if we can get some sort of 50% retracement. So we've got a really nice resistance level through here. We could be looking for something like this. So obviously rejection of this triple top, pull back in towards the 200 moving average into the 50% retracement, and then potential break of this resistance, retest. Maybe you could scale in here and then continue to the upside. Obviously, that's in a perfect world, which obviously the markets are very rarely perfect, but that's the idea I've got so far. We do have the Fed rate cuts coming. I think there's like an almost 90% probability of a rate cut in December now. We've also got obviously the SEP, the Fed dot plot, and we have, what was it? the CME Fed Watch tool as well is also suggesting more cuts in 2026. So yeah, I think longs make a lot of sense, but again, I'm very cautious when it comes to selling the US dollar, which in fairness has burnt me a couple of times, but it's just a rule I've always sort of stuck to, and it's always worked out over the long term anyway. How's New Zealand pairs looking? Let's have a look. Do you mean edge finder or price action wise? I'm going to show you the edge finder, but if you want technicals, then I can pull them up. I mostly go short because of seasonality, end of cutting cycle for the RBNZ, strong weekly resistance. Fair enough. I like that you can reason the trade, not just it's high, so I sell. I like it. Good stuff. Meta on the rip. Yeah, the indice equity markets are doing well, or equity indice markets, whatever you want to call them. Nasdaq's doing quite hot from what I remember. Seems, I'm not sure if my internet's slow or trading view's slow. Bear with me. Seasonality being jackrabbit in 2025. What do you mean by that, Sluggy? Oh, for Aussie New Zealand. Take on Euro Aussie. We'll take a look at that in a minute. So yeah, the indices markets are doing very well. It's really annoying that my trading view is so slow. I don't think there's really anything to do in terms of anywhere to enter, really, because I think what we have seen is potentially the only reasonable pullback we might have in a little while. So we've got a lot of factors supporting the stock markets at the minute. We've got the rate cuts by the Fed. We've got negative US dollar sentiment. Overall, the stock markets are looking quite healthy in themselves. And it seems the AI train is still running. So tech sector, obviously specific to the NASDAQ, is still looking quite good in my opinion. Similar thing for the S&P. I wouldn't be looking to go short on any of these markets or do anything other than waiting for some long positions. I'm already long on the S&P actually, but it's more of a position trade than a swing trade. But yeah, I think if we are looking to be buyers of these markets, which I think is the most sensible option, it would really just be a case of waiting for pullbacks, whether it be a pullback to the 200 moving average, whether it be a pullback into support levels, whatever it is. I think looking for buying opportunities is the most reasonable thing to do right now. We'll have a look. Yeah, Aussie. Wait, hold on. Euro Aussie. That was it. Okay. Let's see. What do we have here? Is there anything on the Edge Finder? I don't see Euro Aussie on here, unless I'm just being blind and I'm missing it. But that immediately makes me quite neutral. And looking at the charts, it's not giving me too much optimism either way for bulls or bears. And the reason is because it's basically sideways. Now, I know obviously it's a big range, and all I've done is draw a box. I get it. But this isn't a trending market at the moment. There is no clear trend. There is no clear edge finder reading. For me, there is nothing here. I think the only trade I can see, and this is really trying to force an idea. We've had the moving average cross, which just indicates a trend change to the downside. We've had clear sellers stepping in, so maybe waiting for a short if we can pull back towards the moving averages into the previous lows around here. But again, that's not a solid idea in my opinion. I think that's just a very rough technical view. With Aussie New Zealand, it was 50-50. Fair enough, Sluggy. I think that's a good decision. If you can't rationalize it solid either way, then best to stay out. Why is Euro up so much, stronger than GBP? Well, the Euro is a big part of the US dollar. So when we are looking, and this is basically what we call capital flows. So if we are looking at the US dollar, in fact, I don't have a good way to sort of visualize this on me at the minute, but same thing with the yen. So if we see the yen strengthen, we generally see the US dollar weaker. If we see the yen weaker, we often see the US dollar stronger. Same thing for the euro. They're inverse markets, essentially. So if we, let me figure this out. Give me a second so I can visualize it for you. Can I compare them? I don't pay for TradingView anymore, so I'm not sure if I can. Yeah, so if you look at the euro compared to the dollar here, the markets are inversed. So when the dollar is under pressure, like what we've seen this year, that is a big boost for the euro, even if there's not necessarily a strong economic reason for the euro to be strong. It will just be strong because of dollar weakness. Obviously, that really varies on the amount of strength, the amount of weaknesses, and all of the other things like the economics. But that's the general rule of thumb. So that's one reason. We also have the other reason that the euro is actually relatively stable in terms of its fundamental data, especially compared to something like the pound, where the pound is the UK economy is, in my opinion, really struggling. So hopefully that gives you a bit of insight. I'm not sure how long I'm on today, because I think someone was meant to be before me, so I've stepped in a bit early. So I'm assuming the next guest is also coming early to take over. So I'll try and keep it short and sweet. Check out silver. You know what, Sluggy? Oh, wait, hold on. Sorry, not Sluggy. That was Phantom. I'm going to show you my silver trade here. I don't need to check out silver because silver is basically my wallpaper at the minute. So I'm not going to go into loads of detail on this. I know it looks ridiculous to some traders. However, there is method behind the madness, I promise. So let me also just pull up something else so I can show you. This is probably going to look like a bit of self-promotion. I'm not trying to do that. This is just me trying to show you the idea behind it. And again, I'm not going to read all of this, but essentially what I'm doing is building a multi-year position in silver with a staggered or a layered approach. So rather than going stop loss, 1% risk, entry, take profit, because that isn't really what I want to do. That doesn't express my long-term fundamental idea well enough, in my opinion, or for what I want. So what I've done is place orders. Oh God, hold on. There. So I've got orders all throughout silver. So I've got very, very small positions. There's 0.02 all the way up from 40 to 50. So every $2 increment, I'm adding another position. Then up from 50 all the way to 60, the position sizes have halved. So it's 0.01. And then from 60, I've got more orders every $5 increments. So to keep it short and simple, the reason I've done that is because the higher the entry, the more risk of drawdown, essentially. So these positions could get triggered quite quickly and quite easily with very little reasoning, really. So my average price would be roughly around here. However, if silver then decides to drop further towards 40, 30, or 35, whatever it may be, these positions can start offsetting that average price, bringing the average price down quite significantly. And that's just a way that I'm managing the risk on this position, or plan to. Then the reason I've got the orders up here is if, let's say these 3 orders are active. So I've got, like 0.03, and then price starts rallying. Great, I've got some profit, but I've missed out on more than half the orders I actually wanted to execute. So at least then I can build up the exposure as price is running on increments. So yeah, anyway, I know that no one asked for that, but I was just hopefully some people may have found some value. Go and check out the tweet if you want all the fundamental breakdowns. It's based heavily on the macro view of a long-term forecast, not a short-term idea, which is why, again, it's on the daily chart, quite a lot of positions staggered, not just one large position. But yeah, let's have a look at short-term trades. Let's see what we can see on the H4. Oh, you can see them all here. Let's just get rid of all of that. So silver, I'm very obviously bullish. I don't think we need to say that at this point. I would be looking, if you were looking for just a swing trade, for something like this, pull back into resistance or previous resistance, and then continue higher. This is a very typical break, retest pattern. And this might be a fib level as well, actually. It's not. It's just below 50% retracement is just below. However, it could work out. It could still come into play. Likely, the 200 would also come closer to 200 moving average, which would obviously provide, in theory, a little bit of support as well. So that's kind of the only swing idea I can find on silver at the minute. And I do quite like it. But having said that, the metals have been very tricky trying to get in this strategy. So I've used it, this is just how I trade on a day-to-day basis. I've been trying to apply it to gold and silver for pretty much the past year, and I've had no success in actually getting an entry, which has been very frustrating. My pound New Zealand entry got filled and immediately went into profit yesterday. I made the call. Sluggy, that's amazing. Well done. Doesn't make sense to trade currently Euro Aussie. Both of them are fundamentally bullish. Yes, that's another great point. Actually, I didn't even think to mention that. Do you take intraday trades? I do. Yes. I don't take intraday trades. I take some scalps. So I normally scalp the London session and I'll scalp the US session. So in US sessions, I'll scalp Microsoft and Tesla, and I'll scalp the S&P and the NASDAQ as well based on VWAPs. And then London session, I'll scalp pound dollar, FTSE, DAX, and gold, again based on VWAPs. Hey James, what's your take on initial jobless claims today for gold? Did you cover this already? We didn't really cover it. I'm fairly sure Nick did earlier, because he was on stream when that was coming out, I think. But yeah, I mean, in my opinion, it doesn't change much. I think we're still going to get those Fed cuts. Sorry, I'm just paying attention to the time. I think we're still going to get the Fed cuts. I don't think it's going to impact that whatsoever. I just think it was a check in the box for a little bit of dollar stability. But yeah, I wouldn't look into it too much in terms of being massively bullish on the dollar now. In terms of gold, it's a general price action behavior. Dollar strengthens, we see dollar crosses down, or dollar assets down, dollar pairs down, whatever you want to say. So obviously gold took a little bit of a hit. Euro dollar took some downside as well. Again, general market dynamic. Unless you're using some crazy indicator, your system TV premium isn't worth it. Yeah, I mean, I don't use TradingView anymore. I've actually moved fully to IG. The only reason I'm using TradingView is just because it's much better to make content on, because obviously it's got the pen tool in there. It's got some more things I can use. It's just a bit easier to annotate. Gold. Yeah, we'll have a look at gold in a second. I'm really behind on the charts. Bear with me. My chart looks pretty much the same. Good stuff. That's what I like to hear. I got to build a proper foundation. Yes, that's exactly it. Building the foundation at the lowest price possible, whilst also keeping drawdown minimal. So if silver ends up going down to 25, 20, worst case, it's not a problem. I'll be down. I think calculated it would be about a 3.5% drawdown if silver dropped to 25, roughly. Yes, Phantom, I've seen the way you trade. It's kind of crazy, actually. You're very active. What's your thoughts on DAX 30? I've not heard someone call it DAX 30 in a long time. So hold on, need to wait for TradingView to decide to load. Could you do yen pairs? Yes, we'll move on to yen pairs shortly. So the DAX, fundamentally, I don't think I've got anything for the DAX. Oh, actually, we do have the Edge Finder giving us a bullish reading of 7, which is quite nice. The H4, actually, this is potentially quite good. So what we've got is a bearish trend with price making higher high, well, almost a higher high and a higher low compared to the previous low here. So what this is telling me is the trend is beginning to change. It's not fully changed yet, because for the way I trade, I would need to see these moving averages cross, and that would tell me the trend then has officially changed, if you will. So what I'd be looking for on the DAX is the moving averages to cross, price to continue higher, create a new high or higher high relative to the previous high, pull back into the moving averages. Then here would be the potential entry point. So yeah, that's what I've got for the DAX. I don't really see much else. Let me just zoom out a bit. Yeah, I think that's probably the most simple way to go about it. Again, relying quite heavily on the Edge Finder reading there. So in regards to yen pairs, the Bank of Japan is expected to hike rates. I've lost the headline. That's annoying. Let me just see if I can find it quickly. I don't know if I'll be able to. It was a while ago. No, I can't. I'll keep it short and sweet then. So the word on the street now is that the Bank of Japan is going to hike rates. Obviously, it's not set in stone, it's not definitive, but that is the consensus now. So that is putting me in a position where dollar yen shorts are actually looking very attractive. And the reason isn't just because of the rate hikes, it's also because we've got the dollar yen bearish reading on the Edge Finder. As we all know, the dollar has got a pretty negative sentiment, and if we have got the Bank of Japan hiking, well, I'll say hiking, it's likely going to be one hike, and we've got the Fed cutting, that's quite a nice divergence for us to potentially short dollar yen at some point. When is, I've still not answered that question. So I think, and this is a very rough, I think, don't take this too literally, but I think I would need to see price continue lower and basically do what we saw with the DAX. It starts trending lower, then we get these moving averages to cross, and I would enter or look to enter on some sort of pullback towards the EMAs. So that's the thought process. But again, it's not a fully fleshed out trade idea just yet. Looking for dollar CAD longs at 1.392. Oh, purely technical. Okay, nice. It's on Forex Factory. What's on Forex Factory? I took all JPY basket today on behalf of that comment. Okay, Max. Oh, you mean the Bank of Japan? I thought you were joking. I thought you meant my comment. Yeah, fair enough. I think being exposed to all of the yen basket or all of the yen pairs is a little bit risky, but I see the thought process behind the madness. So yeah, fair enough. I don't think there's much else for me to go over specifically, really. I've got, so New Zealand, US dollar, Euro dollar, Euro CAD's getting a nice reading as well. Okay, so let's take a look. What do we have on Euro dollar? 1% risk overall. Ah, good. That's what I like to hear, Max. Nice risk distribution. Very professional, Max. Well done. Okay. So Euro dollar, what could we see here? So 1.2 is in view. Oh, wait, sorry, that's not 1.2. That's a wrong line. Need to put that to. Oh, it's a fib. My bad. That's the one I drew on the monthly. Okay. So what I would be looking for Euro dollar is very simple. Again, moving average cross, indicating the trend change, pull back into the 200 towards the 50, and then continuation higher. Very basic, very simple. We could add a fib on there as well. Depending on where you draw it, you could draw one from the most recent low. You could draw it from the swing low down here. Either one, to be honest, is, in my view, completely fine. I would draw it here just because then it lines up with the moving averages. A little bit discretionary, but whatever. So that's the idea, and we've kind of broken out of this downtrend here. So obviously we've got the high, we've got a higher low relative to the previous one, higher high, higher low, higher high, higher low, and higher high. So technically all the stars are aligning. Fundamentally, the edge finder is giving us a bullish reading, so there really isn't that much to say. Just wait for a pullback and look to buy, not financial advice. Check out orange juice. I'm not checking out orange juice. I went short euro yen this morning. Previous day closed red and break of the H4 trend line. Very nice, good stuff. I told you sell dollar Swiss. I don't. Why? I'm a bit confused. Let's see. What's dollar Swiss doing? Yeah, I mean. With all due respect, Real Alpha FX, just because you tell someone to do something in a YouTube stream, it doesn't mean they are going to do it, or they have to do it, or they will do it. Although I actually do quite like the idea of being short dollar Swiss. So the Swiss is quite stable. The Swiss is one of those currencies. I say it quite often. It is pretty stable most of the time. Obviously, there are changes within that, but it is a good currency to use as a proxy to get into other currencies. So if you are leaning either way on a currency and you can't find a good currency to trade against it, the Swiss is sometimes quite a good option. Yeah, dollar Swiss came up to 200, rejection. Yeah, I mean, I'm just trying to think about this on the spot. I've not really checked dollar Swiss in a while, so I'd be looking for maybe something like this. If we could continue lower, create a new low, pull back towards the 200, and then continue lower into sort of these lows here, that would be cool. I think that'd be quite a nice idea. Funnily enough, I'm long dollar Swiss but short dollar yen. I mean, that's not a bad thing. You've got exposure either way to the dollar, so I guess you're relatively neutralized to volatility in that aspect. But yeah. Okay, so what's Bitcoin doing? I've not checked Bitcoin in a while. Actually, H4 looks quite good for shorts. Daily's bearish. What's the weekly looking like? Oh, interesting. We've got a little bit of a mix. So the weekly looks very bullish. So we've got a really nice projection off the 50 daily moving weekly moving average. Kind of using the previous low here as yeah, technically weekly looks very, very bullish. However, the daily looks pretty bearish and the H4 looks even more bearish. So this is where it comes very important. When I say I don't trade Bitcoin or crypto and I don't know much about the drivers, you need to take that seriously because it really depends. If you're super bullish Bitcoin, you'd probably want to pay attention to the weekly, then go down to like the H4 and the daily and wait for the trend to change and then look to buy. Or if you're bearish, then obviously maybe prioritize this H4 and daily time frame for shorts. So the H4, I actually wouldn't mind. Again, I don't trade it, so I'm not going to do this, but technically speaking, this looks quite nice. Pulled back up towards the 200, failure to hold higher. Buyers are clearly not interested in holding higher, at least at the minute. So it does tell me, obviously, bearish trend, continue lower is quite likely. But again, it's just that weekly price action here has given me a little bit of the spooks. go short dollar try, do it now. Yeah, okay. How to blow your account 101, short dollar try. Meta's up 7% on poor news. Can you explain? No, unfortunately not, my friend. I don't trade stocks in how do I explain it? I do trade, like I said earlier, I scalp Tesla and Microsoft sort of infrequently, but I don't trade stocks or keep up with stocks enough to be able to actually give you any value or give you a reasonable answer. So I do apologize, but I don't want to tell you something and it be completely wrong. Again, because it's just not my area of expertise. So let's see what we've got going on. Actually, you know what you could do? Buy the stock box, use code ELITE. So Dow, DAX, gold's getting a bullish read. Let's take a look at gold. I've just realized we've not had a look at gold yet. Or did we? I'm not sure. Anyway. Yeah, so it's pretty similar to silver. And to be honest, it's a very aggressive idea, but I don't mind the looks of buying it pretty much where it is. I'm looking to take it back up to the previous highs here towards 4,350. And the reason is because gold moves very aggressively. It's very clearly found support here. I think if it was going to come down towards the 200 or the 50, I think it would have done it within this range. So I think it would have done it already, basically. I could be wrong. Again, not financial advice. I'm not here to give you signals. I'm here to just explain my thought process and ideas. So I think that's pretty much it for a swing trade. Or if you are a little bit more conservative and you do like to be more conservative, maybe something like this. Wait for if we do get some sort of pullback towards a 200 or a 50, then look to long off there. But yeah, that's kind of all I've got for gold right now. The trend is quite clean. I mean, we are very clearly in a bullish trend. But the problem I find with gold is just timing the entries. I've missed so many opportunities on gold. In fact, I'm not even sure. I've lost track of how many at this point. It's sad. I want to go long dollar try, but my broker doesn't allow it. Yeah, good luck, Josh. Good luck finding a broker. You might need to get a prime broker. If you've got tens of millions in an account, you could probably apply for, well, not tens of millions. If you've got roughly around 500K and you've got some sort of either experience in a professional trading environment, or you have a degree, some sort of formal education, then you can get a professional trading account, or you could apply for one. And very likely you would then be allowed to trade dollar try. But yeah, retail accounts. In fact, I don't think I've ever found a retail broker that will allow you to trade dollar try. Stock to buy ELF. I'm not sure what you mean, Robo. Euro pound. I'm actually waiting to go long euro pound. We covered it yesterday. And where is it? There. So yeah, we covered euro pound, and I'm looking to potentially get in around the 0.87 area. Let me just clean that up. 0.87 there. See, I'm looking to get in around 0.87. So I'm still bullish euro pound, and I think what we're if we end up breaking these lows, it's very likely we're going to see a trend change. So I'm looking to be a buyer here, expecting that we're not going to break below these lows here and create a new bearish trend, because the fundamentals are objectively bullish for euro pound right now. There are some institutional interest, or there is some institutional interest around 0.87, which is another reason I'm looking for that area specifically. But yeah, I mean, in terms of the technicals, it's very difficult to look for a position here because we are about to change into a bearish trend, very clearly making a lower low, lower high. Obviously, this was a lower low relative to the previous one. Technically, we are looking quite bearish. So I'm not going to rush into this trade. It's going to be one that I likely actually won't take, but it's on the watch list. If I see a solid entry come and I'm still convinced at that time, I'll look to take it. But yeah, for now, sitting on the sidelines. Doesn't IC markets have dollar try? I've got no idea. I would expect not, but they could. I mean, I've not traded with every broker, so yeah, I'm sure there are some out there that might offer it, but I've never come across one. Let's see. Your broker allows you to short. Interesting. Yeah, don't do that. That is advice. Do not short dollar try. What does the unemployment being less mean for gold and NAS? So, not much, to be perfectly honest with you. In the current environment we're in, not much. I've just realized I'm about 2.5 minutes over. A1 guys, if no one showed up yet, I'll carry on. If they have, send me a message and I'll jump out. So unemployment basically is obviously part of the. Okay, Marco is here to take over, so I'll just cover this final thing, and then I'll let Marco take over. So yeah, unemployment feeds into the job market, and the job market feeds into the central bank policy or the central bank stance. So if we've got unemployment coming down, then we can expect interest rates to come down as well. If we've got, hold on, let me just think of that. That threw me off. What does unemployment mean for NAS? Yeah, okay, so that's pretty much it. So if we've got the labor market unemployment coming down, generally speaking, for NAS, that would be a positive factor. And then reverse for the dollar. Anyway, ladies and gentlemen, I'm going to head off. Have a good one. Enjoy the rest of your days. And I think I'll see you tomorrow. If not, enjoy your weekends, but I'm fairly sure I will see you tomorrow. Stay safe. Don't get margin called. And yeah, see you later.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. I hope everyone is doing well on this Thursday. So I saw some comments about NFP. I don't think we're getting the NFP tomorrow. So I think the NFP is not going to happen before the Fed, but the Fed happens before the NFP. If we browse through the Forex Factory calendar, let's see. Yeah, I think it's this week, most likely. So I do think we actually get the USD NFP between the 14th and the 20th of December, but I'm not 100% sure. What I do believe is if you go to the Fed watch tool, so there is a Fed meeting in 6 days on the 10th of December. and there's of course 87% chance of a rate cut. So rate cuts are coming in December, most likely in the next year as well, which is pretty interesting. So what has been happening today? Well, two of my positions, euro dollar is running some okay profit, NZD USD also trucking higher, pushing a bit higher. The DXY is red on the day, so DXY is losing some value. JXY starting to appreciate a bit with the comments from the Bank of Japan Governor Ueda. So he had some hawkish comments. He said that there may be a rate hike in December. That's why the yen started to appreciate. So interesting to see that. Crypto is still overall, I would say, bearish. Let's see, metals markets, silver and gold. Gold is up, or gold is break even on the day, while silver is starting to pull back. So my favorite thing for today is actually silver. I'm definitely looking at silver. I'm looking to see, let me just also check something on the S&P. So the 1 hour chart. Okay, the SPX is pulling back from this wick. Back to the daily. Silver, in my opinion, is the best play right now. Although the Edge Finder is not giving us a bullish reading, we go to silver. Okay, it's bullish. So it flipped from neutral to bullish to neutral, but looks like it is bullish after all. And for gold, bullish as well. So nice to see that the metals are getting a bullish reading. I think the overall uptrend is very healthy, very strong. This is the daily chart. Fundamentals, super bullish in my opinion. Inflation is coming. US government has reopened. The spending, the printing continues. You have Trump's big beautiful bill coming in 2026. That should be very inflationary. So yeah, basically higher inflation, silver and gold go up. I didn't want to buy the highs, so I didn't want to get in at the all-time highs. I would like, or I would prefer to get in on a pullback. So if I can get in at this area of support, or maybe close to the 20 MA, that would be pretty nice. So that's also my game plan. Buy limit around 54, so around the 54 level, and then stop loss, tight stop loss, let's say, let me just see this. So let's say I get in just above 54. Let's say that is the entry, because humans love round numbers. So they usually place a lot of orders around round numbers. Essentially, you want to front run if you're using buy limits. So you don't want to place your order exactly at 54, because that's going to be full of orders. And also for the stop loss, you don't want to place it right at 52. You want to place it below 52, because 52 is again going to be an area with a lot of orders because of the law of round numbers, right? So humans, we love round numbers. They make things simple, and we love placing positions around round numbers. I think this would be a nice trade. See, tight stop loss. So stop loss would be around 51.67. Yeah, I have the alert set. If it gets triggered, I will consider getting in. Of course, if you're in the A1 Discord, this is going to be a trade signal. So you will get all of the exact levels, all of the exact entries in the Discord. If you do want to join the Discord, you can do so with a massive discount with this code right here. So consider joining us. You're going to get Nick's signals, Chris Pulver, Iwind, and me. Silver, chart of the week, I would say. Definitely chart of the week. The most interesting chart right now. NASDAQ looks okay. Still looks healthy overall. We did get some cracks in the AI story yesterday. So if you go to the market moving news on Financial Juice, Meta's Zuckerberg plans up to 30% cuts for metaverse efforts. I also saw there was a comment I also saw there was a comment. Why is Meta going up? Well, looks like this is the reason. So Zuckerberg, or the lizard man, plans up to 30% cuts for metaverse efforts. I'm not sure why that is so bullish, but it turns out to be super bullish. Initial jobless claims look like there was a bit of a reaction, a bit of a bullish reaction and a bit of a bearish reaction on the SPX, but overall not a massive move. I mean, on the day, NASDAQ is a little bit down, SPX is actually in the green, okay? And then, see, this is the Bank of Japan likely to raise interest rates in December, a decision Japan's government will likely tolerate. This was the one. Microsoft lowers AI software sales quotas. So that is kind of a crack in the artificial intelligence story. I've been closely watching the AI story, especially for the NASDAQ, especially for trading the NAS. But for me personally, so the thing that most experts say, that most, let's say, successful traders say is it's a bubble. It's going to burst sooner or later. The amount of money that's being invested into these data centers, it's too much. So they're building way too much infrastructure. They're building way too much data centers. It's very tough to pay off that massive investment. So it's going to burst. There's going to be a pullback of a big magnitude, but not yet. I still think, and the professional traders still believe this thing continues going higher. Some of the signs that would make me bearish or make them bearish would be if CEOs of massive AI companies or massive technology companies, such as Meta, so the lizard man, if they start coming out with titles or, let's say, posts like this, where Microsoft lowers the AI software sales quotas, or if Meta says investment into AI is no longer considered to be super profitable, we think we have over-invested a bit, we're going to stop investing so much, that would be a sign of cracks in the market. That would be a sign that the artificial intelligence train may be coming to a halt. Okay? So I thought that was pretty interesting. Let me see what you guys are saying. Let's see. Doesn't IC Markets have USD or why? I don't think so. Turkish lira, is that the Turkish lira? I think it is. I tried to get in on a position on USD CNH, so USD Chinese yuan. I tried to take a short position because I'm short on the dollar, and I think the Chinese yuan is going to appreciate quite a lot. So my idea was selling here, tight stop, targeting the lows, because the current policy of the Bank of China, or just the Chinese government, is they want a stronger yuan. So they want a stronger currency. And usually, from my research, the thing that the Chinese government wants usually translates into the currency. So if they want a stronger currency, usually yuan goes up. If they want a weaker currency, usually yuan goes down. So this was a pretty good position, but I tried to execute it on my IC markets because there is USD CNH on my IC markets. The swaps are massive. So the swaps are crazy, crazy high. I can read them right now. So let me see. If I open up my MetaTrader and I go to USD CNH, Chinese renminbi. So the swap short is minus 69 euros per one lot. So if I go short one lot of USD CNH on my broker, I'll be paying 69 euros every day to keep holding the position. That doesn't make any financial sense. So the only way you can actually execute this trade would be through options. I think through options you would get a better deal. So you would pay premium up front, but then you can I think, sell puts or something like that, and you can actually get a much better opportunity to short USD CNH. On the retail brokers, it's just not worth it. The swaps are super high. It would be a much different story if I was bullish. So if I wanted to buy USD CNH, that would be absolutely great, because then I would receive massive positive swaps. Okay. Hey Sluggy, hello Max. Nasdaq to test 25200. I wouldn't say so right now. I wouldn't say so. I think this is still pretty bullish. Nvidia on the slide. We can open up Nvidia. Let's see. On the slide, not really. Hey M Tunzi, hello, welcome to the stream. USD CAD longs look interesting. USD CAD. Well, I can see your reasoning. I can see the methodology behind it. As we are kind of still in this channel-like formation, but I'm pretty short on the USD right now. That is explained, or that is in the market through my positions of long Euro USD, long NZD USD. So I'm not looking to buy the dollar right now. It would be nice for positive swaps, but I think the CAD is turning a bit. They had some good GDP numbers, if I'm not mistaken, which I can quickly open up right here. Let's see GDP. CAD. Yeah, so they had some good GDP numbers. They had some good numbers overall. The latest print, at least. Let's see. Canada. It's still 50-50, but the manufacturing looks like it came out bearish, but the GDP came in. The GDP should be bullish. So this should be bullish. But you had the unemployment, which was much better than expected in the latest print, and the employment change, which was better than expected. So USD CAD fundamentally no longer such a good trade in my opinion. Hey Joshua, what's up? Share something yesterday in the Discord. Silver 59 was perfect. 100% profit gain. Let's see, 59 level. Okay, so the high, I'm guessing. Yeah, I think we just hit, we almost hit 59. On my chart, 59 is still not hit. Okay. Zuck, yes, the Lizard King. Are you looking to catch the crash? Well, of course. The game plan is to keep my eye on the streets and see if there is any cracks in the market, see if there is any cracks in the AI story. So if there is a crash, I'm not looking to sell in the crash. I'm looking to just build a position. I'm looking to buy, especially for, let's say, some longer term investments. So if I can get in, like I got in during Trump's crazy tariff announcements. So this was a great opportunity to buy stocks cheap and to get in as a long-term investment. That is something I would definitely love to see again. So yeah, I'm not expecting a crash right now. If something happens, I think it'll just be a pullback. I think we still have a lot of power to go up. The cracks are still not so big to warrant the crash. So, and it doesn't look like a bubble. I think for us to really be in a bubble, you would need to see price action that you saw, for example, on Bitcoin. So this move, this move right here. See, you need to see something like this. Just erratic explosion higher. I do want to take this time to mention the sponsor of today's video. If you guys are looking to expand your trading capital, DNA Funded is a great option to consider. So you can get 30% off with the code A1Live, and the 25% off. 25% off, and it is applied to any challenge. So A1 Live, 25% off, any challenges, DNA funded. Check it out. This is my personal 50K phase 2 account. So I am almost done. I have almost finished with the phase 2. I'm at 52.125. The target is 52.5. So 5% target for phase 2. 2 trades open, buy on the SPX, buy on the Aussie dollar, both trades running some pretty decent profit, if I do say so myself. And the equity curve just seems to be going higher and higher. So I got pretty lucky with this phase 2. Phase 1 was tricky. So phase 1 had a lot of ups and a lot of downs until I eventually hit the 10% target. So yeah, if you want updates on this, you can follow me on these live streams, or you can follow me on my YouTube channel. I update this regularly, or I make video updates about this regularly. I still have to finish the trading days. Oh, okay. So I forgot about the trading days portion of it. So you need to have free trading days to finish phase 1 and then finish phase 2. But that's not hard to do. Anyway, 25% off any challenge. Code is A1 Live. Marco, what's your take on GBP USD? Let's open up GBP USD. Well, looks like the pound is gaining a lot of value. The only fundamental event that we had was the autumn budget, which wasn't really an event. It was more of a nothing burger than a clear event. So I'm not sure why the pound is gaining so much value. Let me see pound Aussie as well. Overall, I'm still bearish on the pound, but I'm also bearish on the US dollar. Right? So for me personally, I don't have a clear edge here. When I trade currencies, I need one currency to be strong. I need the second one to be weak. In my opinion, the pound right now is weak. The dollar is weak as well. So you're not really getting a massive trading edge. Let's take a look at the short-term data for the US. It is 54%. For the UK, it is 33%. So the short-term data seems to be more bearish, while the longer-term data is more bearish for the UK compared to the US. But just from my research, from my analysis, rate cuts are coming. For the US dollar, it's pretty much confirmed. We're going to have a rate cut in December. We're going to have rate cuts in 2026. That's not bullish for the dollar. So the dollar is already losing value. So you went long at 1.3213. Well, if it fits your plan, then just keep holding the position. For me personally, I think there's better currencies to trade, because if I want to go short on the US dollar, I think buying euro dollar and especially buying NZD/USD is a better position, better play. Marco, do you know about the liquidity cycle? Nope, I'm not sure what you mean. Marco just saying hi and thanks from China. Well, thank you very much for the feedback and thank you for joining. Hope you enjoyed the stream. Hey, Marco, does euro dollar and NZD/USD pullback good for another entry long? Well, I would say it actually is. I would say if I wasn't already in positions, if there's a pullback, I would get in. Of course, not financial advice, but just my opinion. If I was not already in these entries, in these positions, I would be looking to get in on a slight pullback. Best thing you can do is watch for the 20 MA getting closer and then take an entry around the 20 MA. That's my game plan on silver, for example. So I want to get in close to the 54 level, close to the 20 MA. That would be great. Do you know about the real rates? Yeah, so I did some research on the real rates, but I don't know enough about it to hold, let's say, a brief presentation. So I'm not going to touch on the subject. China has YouTube. I personally like the selling hedging. They invest but short on trading to be neutral in case the drop occurs. Hey, Marco, I'm waiting for silver to pull back to around 54. What's your take on that? I have the same opinion. So I'm watching for the same thing. 54 level, I think, is pretty enticing. Major level of support. This is a pretty clear cup and handle. So cup and handle scenario. And then you get a breakout. So you get a breakout of this level of resistance. Resistance becomes support. And we can just retest the support, touch the 20 MA, and then go up. It doesn't usually happen. Just a disclaimer. This year especially, silver has not been pulling back at all. So silver has just been exploding higher. The only big pullback was here, which I did get in, but I got taken out prematurely, unfortunately. So I tried to get in on the pullback. It didn't work, but I'm still pretty happy I took a stab at it. And I took a setup in here. So yeah, we had some consolidation, then just a massive explosion with no pullbacks. Then we had a big pullback, and now we are continuing higher. So the only thing I'm worried about is that silver goes up without me, basically. So that silver just keeps on going higher, trending higher. Congrats, Marco. Well, thank you. I think you're referring to the DNA Fund Challenge. By the way, this is only using trade signals from ChatGPT. So it's a series I'm doing on my YouTube channel where every single day I ask ChatGPT for a trade on the S&P and a trade on a major currency pair. Then I just execute the trade in the DNA funded account. Timing on asking ChatGPT for your challenge important? Well, I just do it every day around 11 a.m. London time. So I do use sort of a fixed time because that's when I'm available. Every day, 11 a.m. London time, I ask for trades and I immediately open the trades on the DNA challenge account. On my side, too many people look for 54, so might be better to wait for 53. Just a personal thought, of course. That is a good point, I would say. So that is definitely a good point, because if most people are looking for something, it's probably not going to happen. Or we're just going to run through the level. Or we may not even reach the level. So maybe this level is overcrowded, the 54 level. Maybe the 53 level is a bit better, a bit more efficient. Although with silver, I just think the pullbacks can really be small. So yeah, keeping a stop loss or a buy limit at 54 and then a stop loss at, let's say, 52.3 could be good, could be healthy if the price wants to pull back a bit more. Or if I do get taken out, I could try to get back in again a bit lower. But I do want to take, most likely, I do want to take the initial position at around 54. Just my 2 cents. Okay, looking at some other stuff. So crypto we covered. It just seems bearish. I can repeat my analysis that I have been reciting for the past week. We have broken a key level of support on Bitcoin. We have broken sort of a key trend line. We are in the bearish part of the halving cycle, which doesn't help. So Bitcoin to me looks like a pretty bearish story right here. Yeah, pretty bearish story in my opinion. And I just see, in terms of technical analysis, in terms of the momentum, I don't see anything telling me price wants to go up. I just see a lot of bearish price action. Okay, a bit of a recovery right now, but it's not really big. Okay, copper, nothing. Let's see, oil. Oil keeps dripping lower, just slightly going lower and lower. DXY, I'm bearish on. It has broken the trend line, I would say. Is DXY going to 95? Because we do have a member of our Discord, of the A1 Discord, Ballout. He keeps calling for DXY to 95. I don't think that's going to happen. I think that's a bit too ambitious. But a pullback, a correction, I think is definitely going to happen. Main reason, just massive printing, massive spending, devaluing of the dollar, rate cuts are incoming. all of the fundamentals are pretty much pointing to a lower USD. So I just think it's a no-brainer. To be short on the US dollar is kind of a no-brainer right now in this market environment. Yen I wouldn't touch right now because there's a lot of talk of possible rate hikes. So the governor Ueda right here, he mentioned possible rate hikes in December, okay? Now, what they did last year, in I think 2024, they also did a pretty similar thing, or in 23. I'm not sure if it's 23 or 24, but essentially they said that they were gonna hike rates in December, and they never did. Instead, they hiked in January. So that's sort of a classic move by a central bank. They say that they will hike. The market has a move. The yen appreciates. And then they do nothing, basically fooling the whole market. And then 1 month, 2 months later, they actually hike interest rates. So as far as the yen goes, I'm being patient right now. I don't really want to take my chances with the yen. There was talk of an intervention. Now there's talk of a rate hike. It's just too much. Bank of Japan can come in at any time and do some stuff in the markets and completely mess up your position, introduce a lot of volatility, and then you're basically screwed on your position. So I think the yen right now is pretty dangerous. It has always been dangerous. You know, Bank of Japan, super unpredictable. The only central bank that doesn't have a specific time of when they will have an interest rate decision. You just get the rough date, and then you hope that it's going to be, let's say, at a specific time, but it never is. They can just come in at any time with the rate hike or a rate cut. So they're pretty weird. Japanese people, or not Japanese people, but Bank of Japan, pretty weird folks working there. So very unpredictable, tough thing to trade. I'm leaving the yen alone for now because I'm just not sure on the outcome. So the best trade I have is silver buys and selling the US dollar. I think that is the best. That's about it. Thank you guys very much for watching. I'll be streaming tomorrow as well, so you can catch me tomorrow. Join the Discord if you want to get my trading signals. The discount code is Marco. Have a great rest of the week. Tomorrow, there's no NFP. I'm pretty sure we don't have an NFP, but we have the core PCE number, which is pretty important. So good luck. See you in the next one.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.